In today's video, guys, I'm going to share with you 3 ways to weather the coming market storm in our Yieldmax funds as the S&P and NASDAQ recently broke major support. So let's go ahead and get right into that video. We earn over $100,000 per year in dividends at this channel, which is higher than most channels that you can find, I'm sure. And our performance and value shows that we're up 94% over the last 3 years, whereas the S&P and NASDAQ are up a third of that. And on a year-to-date basis, it shows that we're up 35%, okay, and the S&P is up 14, the NASDAQ's up 29. So we're beating all the indexes on a year-to-date basis, on a 3-year basis, and yesterday on a daily basis, we also outperformed. So if you need help seeing similar performance results in your brokerage account, email me for my e-guides at aikentod48@gmail.com. We're living financially free out of our brokerage accounts here at this channel, and so can you. Because for every $1 you put in your account, you get $4 of purchasing power. I have this market value, 466. Now I have over $1 million in purchasing power because I've been reducing some names yesterday, and that's what this video is going to be about, okay, is how to weather the coming market storm in our Yieldmax funds. So the first thing that I did yesterday, okay, was I looked at the S&P chart like I always do, okay, and if you go into the chart, you'll see that we broke major support levels. Okay, so SPY, let's go to a chart. We're up pre-market. We're up 0.38%. So that's an encouraging sign. But still, if you look at this chart, you can see that we broke that 100-day moving average, a clear break of it. So that's the 100, the purple line, and now the 200-day moving average is looming below, okay, and that's actually a good sign of support. You know, we have support coming in at about not 420, but looks like about 430. We have support coming in, so we could see a bounce today. 433, we're right around that level, but just in case, you know, we're on this fence now, and just in case, I have to protect myself. Okay, so QQQ. All right, let's go look at a chart of that, and you'll see the same thing. Okay, we broke the 50, the blue line, and now we're holding support on that 100-day moving average. So this could set up for a rally today. All right, the RSI is almost oversold. Okay, if you need help understanding these charts, that's in my e-guides, volume 2. I have e-guides. Volume 1 is fundamental analysis. Volume 2 is technical analysis. Volume 3 is how to live financially free out of your brokerage accounts using the power of margin. And volume 4 is how to play Cornerstone properly. Okay, so the markets are looking a little sketchy. This actually looks kind of constructive. Now, there's always a wall of worry to climb, okay? We have the Michael Burry shorts, the government shutdowns, recession fears, rising rates. But I got to tell you, I've had worse, okay? I mean, when you talk about a wall of worry that every bull market has to climb, I've seen, you know, I've gone up against Ukraine, China wars, you know, a weakening consumer, you know, and right now the jobs numbers are so high, the jobs numbers are so strong, and corporate profits are so strong that I don't really see that recession coming. I never saw it in 2022. And I don't see why it would come back and rear its ugly head in 2023 unless these rate hikes are going to take effect. But I don't see how that's going to happen when we're already pricing in lower rates for 2024 and 2025. So the market's always forward-looking 12 months, and you have to climb that wall of worry. Nonetheless, okay, you still need to respect the price action, especially in these Yieldmax funds, okay? Because Yieldmax, they're not indexes like Cornerstone. Cornerstone, I have 500 grand, as you can see, about $500,000 in Cornerstone, which is what I have that e-guide on, because I get so many questions on Cornerstone, okay? But we'll get into Cornerstone later because that's part of this strategy. So the first thing that I did today, okay, was I sold a bunch of Yieldmax names. I cut them all in half, okay? So besides Tesla and NVIDIA right here that you see, Tesla and NVIDIA, 10,000, 10,000, I added shorts to those, okay? So I'm not worried about those, and I wanted to keep those because they're my highest yield. So I just added some shorts, and I made that in a video on 2 videos ago on NVIDIA, how to protect NVIDIA on the fence. All right, so I have shorts for Tesla and NVIDIA at the bottom, TSLS and NVDS. All right, I sold half of all my Yieldmax funds. This is what you do when the market's starting to look crazy and price action is getting a little volatile. Okay, you go ahead and sell half of all the volatile names that you're up in or that you're down in for a slight break even. Okay, or slight loss. Okay, you want a slight gain, slight losses. You don't want to incur too many tax penalties. Okay, so you sell half of I sold half of all my Yieldmax funds. I even added to OARC, by the way, so I added a few grand to that because it's diversified and still has a large yield. Now, okay, I just thought that the stock beta was too great in these Yieldmax names versus the indexes, okay? I want my performance to stay intact. And as you saw, my performance is still holding up pretty well, okay? 35%, okay? It's still really good. I mean, it's beating the NASDAQ, and I'm using a dividend approach here, which is very passive and conservative. Yes, I use margin, but I only use a fraction of my margin to get ahead. So when I did this, it raised big equity. When I sold these Yieldmax names, my available now is 225,000. As you can see, my available was around 200 before. Okay, now it's around 225. So I'm very safe now, feeling very conservative. I'm feeling very nimble, very lean. Okay, I'm ready for any market correction that may come. Look, we're at 173,000 in debt. Okay, so I raise a lot of equity due to the fact that Yieldmax is 50% maintenance, guys. I tell you this in every video, but look, okay, so if we go to a chart of, let's go to Apple here. If I can, okay, zoom into that. I'm on my phone. Pardon me, all the movement. Okay, it's my phone. I'm not on my computer. I'm living totally free out of my brokerage account, and that includes making videos wherever I want on my phone, okay? So snapshot, Apple, check this out. View margin maintenance requirement. This is the secret to living financially free out of your brokerage account. Well, Apple's maintenance is 50%. So for every 10,000 I have in Apple, 5,000 of my equity is taken up. This is a problem, as I always say, because equity is everything here, okay? I don't care about my market value. All right, this is purely an ego number, a meaningless number. I care about this available withdrawal number, okay? When that gets to zero, you're in a margin call. But even if you're not using margin, I always say you want to be able to withdraw out of your account to live freely, don't you? Well, if you have high maintenance names and Yieldmax names, okay, you can't withdraw as much as you'd like because all of your equity is taken up. If you need help understanding maintenance, that's in my margin e-guide, okay? So email me for that anytime. So this 225,000, I can not only withstand a 20% market correction, because if you take my account size of let's just say 700,000, 500 account size, and 200 in debt roughly. So let's just call it 700,000, okay, and total invested. 10% correction, that's 70,000. A 20% correction is 140,000. A 30% correction would be 210,000. So I can withstand over a 30% correction, and I can withdraw anytime I want out of my E-Trade account. All of my bills are automated to E-Trade. I can swipe my E-Trade debit and checking card anywhere I want in the world. I can buy cars, clothes, shoes, houses. Yes, even houses on margin, because the rate on margin is better than certain mortgage rates. Okay, my interest rate on my margin is 6% roughly, and that's better than a mortgage rate. And this doesn't show up on a credit check. And you can click sell at any time like I did yesterday, and it's gone. You just have to negotiate your rates down like many of my subscribers and clients did at this channel. So, okay, so I raised a lot of equity doing this. Okay, I averted a lot of risk by selling these Yieldmax funds into a possible market storm, and I raised a lot of equity. So now I'm like free. I don't have to worry about a market correction. I can take up to 30% once again, and that's not even including my short options. Okay, I have my short options down here, which were up 50% yesterday and up 50% the day before. They're not really up for me much right now. I'm up 100%, yes. But I'm not worried about these on a day-to-day down basis. I'm worried about them in a crash. So if we get a 20%, 30% crash, these puts are going to absolutely clean up. And so I'll probably make more than I lost in the puts. And then my dividends in Cornerstone and Yieldmax will cover the rest of my downside, because I make 20% dividends in Cornerstone, and then Yieldmax gives me another 5% yield on my total portfolio. So now we need to talk about how I'm going to make up for the missing performance since I sold Yieldmax. Okay, how do I make up if the market bounces today? How do we make up for that lost performance? Okay, this is always the strategy that I use when the market's falling. Okay, I use market falls as an opportunity to lower my margin, increase income, and increase performance. So what I did was I bought 1/3 Fangu. So I sold half of all my Yieldmax funds roughly and bought 1/3 Fangu, because Fangu is basically Yieldmax. Okay, this is our triple ETF. It's very risky, so beware. Okay, I built a $5,000 position into Fangu already, and we're already down 17%. So this thing can move fast, but 17% for me, $1,000 is a pinprick. $4,000 is 1% of my performance. So 1,000 is a quarter basis point of percentage. So I'm not a performance. So I'm not worried about Yieldmax performance right now, because I'm just going with the market. Okay, now what I'm doing though is I'm averaging into Fangu 1/3 Fangu. As you can see, I have 5,000 in that, and I also added to some TQQ. Okay, I added 5,000 TQQ, which we're also down 10% in because we started building a position in. But $500 for me is nothing. All right, so I have 10,000 triple tech now to offset the 30K of Yieldmax funds that I just sold. Because remember, we were just at about 200 now in debt. Now I'm at 170 in debt. So about 30K more of margin I took off the books. And now I'm going to get that back in performance because 10K of a triple is like 30K of a single, which is Yieldmax or single leveraged. They're not leveraged, they're single. So that's how I'm getting back my performance is I sold 30K Yieldmax, bought back 1/3 Fangu. That's how I'm going to get my capital gains performance back. Now, how am I going to get my income back? Well, how did my income stay over 120,000, which is 10,000 per month? But also, that's not even counting the other Yieldmax funds that haven't registered. So between that and the Cornerstone drip, we're still going to get that to about 130 by the end of the year, which comes out to about $11,000 per month in cash flow. How did I get that yield to stay at about 120,000 after I dumped 30K of Yieldmax? Well, this is always my Alamo plan, guys. Whenever the market goes bad, we go to the Alamo, okay? I go to the triple C's, I always call it. The triples, like I just showed you, I sell 30K of the singles of the singles and buy back 1/3 in the triples, so I match that performance back on the upside. But then I take the proceeds, that 20K in proceeds roughly, and I add it to Cornerstone, okay? Excuse me for my sniffles. It's very early in the morning, and I'm trying to get this video out before the market opens. Okay, so because I have to update this on Discord, I have my trading recap on Discord every day, and I wanted to give you guys the video first before telling you all the moves. Okay, so what I did was, without further ado, this is why I have 500K in my account. I took the proceeds and bought more Cornerstone. Now I also sold some other things yesterday, which I'm going to update in the Discord trading section, in my portfolio recap section. So you can see all the other funds that I sold too. I didn't just sell Yieldmax. Now, but I sold lower dividend paying yield funds that for a gain, you know, they were high quality funds. I didn't like to part with them, but I see more opportunity in the triple C's and the Cornerstone funds and in the triple longs. You know, when you catch a market bottom, those longs can really benefit you, those triples. And then C's, okay, so look, yes, I have 500 grand in the C's. Yes, they're a 4-star fund on Morningstar. Actually, CRF is a 5-star fund, as you can see here. Okay, I'm in Calamos. Okay, Calamos, that's one of the funds I parted with yesterday, which is one of my favorite funds. I told you, look, it's so highly rated there. But CRF, if we go to a Morningstar chart of CRF, you'll see it's 5 stars. Okay, it's really hard to find 5-star funds, and it beats the indexes. So I don't want to hear any complaints about how it doesn't beat the indexes. You have to go back and factor in the dividends and the drips. 5-star fund beats the indexes. And yes, it has also a really special drip program, which I just alluded to. If you go to CRF here, you see that the market price is around $7.95, but the drip prices are down here at $6. So I'm going to make more money in Cornerstone off my drips and the 21% dividend, because you get 21% dividends and you get 22% gains each month. 652, that's 22%. 642, 24%. Okay, 685, 16, and 627, 26%. So you get thousands of dollars of gains in each month in each of these funds in Cornerstone, CRF and CLM. You get $1,000 each, free money every month just for reinvesting that 21% dividend back down at the NAV. Okay, it's very special. You can't find another drip program like this. You just have to play the rights offering properly, which is what I alert you of on the Cornerstone channel here in Discord. So Discord, we have over 400 members here, and you can see right here the Cornerstone section here. We have you know, an announcement section, but here, sorry if I can just find my my stuff here. Okay, we have a portfolio recap section, which is where I track my portfolio when I'm not making videos on YouTube. But we also have a Cornerstone, a news section for Cornerstone. We have a rights offering section. We have a drip section. See, here it is. I'm sorry, Cornerstone. Sorry for the phone being sideways. Please, if you want to see a true value here, try to focus and not click out of the video and watch this. we have the RO announcement only. So this is where we place the Cornerstone rights offering announcement, where every closed-end fund has a drop in its stock every year, and you want to be out before that drop, okay? And we also have a drip channel and many more channels here, because not every brokerage is the same, okay? Not every brokerage offers that special drip in Cornerstone. So and also you have different margin rates, different maintenance requirements at your specific brokerage. So we have, again, over 400 members at the Discord chat room who can share their unique experiences with you on how they're living financially free out of their brokerage accounts. So we have a drip channel that tells you who does the drip for Cornerstone. We have an RO channel when Cornerstone does the rights offering announcement. When it has that, we alert you of it. So we sell that. We sell out of all of our Cornerstone funds when that announcement comes, and then we buy back after it's finished. That's how we reset our 21% dividend and pocket those 30% premiums, because you can make about 50% gains in Cornerstone each year. You get 30% premiums on average. Look it up if you don't believe me, and 20% dividends plus your drip. Okay, so you can get over 50% gains in Cornerstone, but you have to play it properly, okay? You have to play it for that rights offering, and again, that's what I alert you of on the Discord chat room. When you buy my e-guide, you get free access to Discord, and you get my phone number for free to call me anytime. That's an immense value in my opinion. So I think that'll do it for the video, guys, okay? The market's, showing some volatile price action, and I want to get ahead of that in case the market goes lower. I mean, people think a big market storm is coming. I don't think so. I think we're looking constructive on the moving averages, but you have to respect the price action. So I sold half of all my Yieldmax funds, okay? I bought 1/3 Fangu, and then I took the proceeds and put them in a Cornerstone to replace that lost yield. Plus, Cornerstone is 30% maintenance, so I can put 100,000 in Cornerstone, and it only takes up 30% of my equity, 30,000 of my dollars. So you view margin maintenance requirement 30% for Cornerstone. So it's the greatest investment vehicle on earth, the greatest that I've ever found. Most people who have invested in Cornerstone are coming around to the fact that it's the best fund that they've ever seen too, when you get the 21% dividend and the drips. And that's how I'm making up for my Yieldmax performance, that and Fangu. So I hope you enjoyed the video, guys. Leave questions in the comment section below if you have any ideas on how to play this coming market storm. And if you need help living financially free out of your brokerage accounts, email me again for my e-guides at aikentod48@gmail.com, and I'll talk to you soon. Thanks.